how someone can manage a portfolio very effectively. Some common mistakes what people do and how to effectively manage to get better ROI, to get better rate of interest, right? Or return on investment in your existing portfolio, be it under short term or be it under long term. How we can have it, we'll be discussing today, right? And let me share my screen and let's start our discussion about portfolio management. So, first of all, there are two important criteria, right, in order to manage our portfolio. One, to understand what exactly is the portfolio comprised of and how to avoid some portfolio management mistakes. So, first of all, we will dive into portfolio related, right? So, yes, whoever have investment into stocks, sir, yes, I'm managing like 30 companies in my portfolio. I have 50 companies in my portfolio. I have 10 companies in my portfolio, right? So portfolio should always be broken up. What do I mean by breaking the portfolio, right? So randomly entering into few companies is one way of doing it. Second, bifurcating between short term and long term, right? Out of 100 people I take in a room and I ask them, how many of you are holding the companies for more than 3 years, 5 years, 10 years, for a very long time, for a very long term? Out of 100, I hardly get 10-15 people. Majority of the people focus on short term profit booking because they need that profits. Because in share market, right, the fact is, as you keep booking profits or as you have for shorter term, right, the adrenaline levels also will be pushing up, right? That's the reason many people tempt between the short term and long term. And short term, yes, there will be more number of investors in short term than on long term. And it is a wise practice to understand what stocks is in your short term and what are the companies which are intending to hold for a long term, right? So I hope everyone had a clarity that every portfolio you're holding, see what companies are strong, or even based on your analysis, sir, yes, this is a company where it can scale up, or over a longer period of time I have a very good confidence on this. So those comes under long term. Sir, as the sector is in momentum, as the company is having some good quarterly growth and may not be for long term, but couple of weeks, couple of months, I expect this company to give good returns. Those are short term. So bifurcate between short term and long term. Short term, any investments you are holding less than 1 year, those come under short term, right? Stocks which are holding for more than 1 year, 3 years, 5 years, come under long term portfolio. And for some of you, one in the same demat account you can hold, if you can have that clarity, or even you can make a watch list, or you can prepare an Excel, you can keep that bifurcation. Or you can have two demat accounts, one demat account for all the short term investments, be it like your IPOs, stocks which you buy and sell immediately, couple of days, couple of weeks, couple of months. So as the buying and selling is more, prefer a discount service demat account, right, for all the short term. Long term, maybe I'll hold in another demat account. So the trades which I intend to do for a very longer time, I keep there. So it's okay to have two demat accounts because sometime you need to take an immediate trade, but if there is a server related issue, you will not be able to. A backup account is always good, right? One main account and one backup account is for a rainy day. Normally, the kind of technical issues is common for all the demat accounts, and once in a while it happens, right? Once in a while, so it's okay. But that does not mean you have 3 accounts, 4 demat accounts like that. Not required, right? So you can have 2, one for your short term and one for your long term stocks. Sir, I just wanted to maintain everything in the same account. That is also completely fine. So now between this short term and long term, or what is that you need to do? Let's understand, right? First of all, in the short term watch list stocks, whatever you have invested, remember that every week, at least twice, you need to review them. Sir, I am holding Suzlon Limited, IREDA, RVNL, or Titagar, right? Just for a very short term, not long term. Just for some trading related, couple of weeks, couple of months, I get some 25-30%, I book my profits. So it is a must for you to review. At least twice you review what is happening, how is the price, how is the volume strength, like that. And that's how you keep a control on your trade. You check daily, that's fine, but at least twice a week. Second, any investments which are for a couple of months, less than 1 year, come under short term. Now there is one important question. I'll just give you an example, right? In any stock which you are following, you can apply. Let's say, sir, Suzlon is a company where I'm following from couple of months, and this is a stock where we have been invested, right? I hope many of the platinum members would know that this is a stock we keep discussing, we keep reviewing, and there were no serious calls. We have discussed about exiting because the overall trend has been good for this company and it is picking up, right? And it's picking up. So in Suzlon, if you look at it, sir, is it a short term or is it a long term company, right? In the last 9 months or even 1 year, the stock has been doing well, right? The sector tailwinds are also in that. But if you see the history going back 1 year, 2 years, like that, fundamentally not a very strong company. But yes, future prospectus may be good. So those kind of a companies where you feel the past numbers wise, data wise, not very strong, I think I can keep it for long term, but not fully convinced. So those kind of a decisions, what you need to do, give time for the stock, which means observe this company for a couple of quarters. It can be 3 quarters, it can be 4 quarters. Like that, you keep observing, and every quarter, if it is building up, the numbers are improving, then only you add it into the long term. Else it will be under short term, right? It can go up to 1.5 years also, right? Sir, I'm just observing quarter on quarters. The last 6 quarters I've been observing, and once it satisfies, then only you move it under long term. Which means in short term, what do? You observe your stock prices on daily time frame, right? You keep observing on daily time frame, and occasionally for double confirmation you check on weekly, but you keep it under short term. After 4 consecutive quarters, the company fundamentally has been doing good, technically building up, or even you give room for another 2 more quarters, 6 quarters, right? Around 1.5 years you'll be observing. Then only move it under long term, because long term stocks, what we hold, should be good compounders. Your Tata Motors, right? Your Titan Limited, your Varun Beverages Limited. If you see the past, I'll just tell you a simple rule. I think you would have heard from me multiple times, right? Multiple times. Any stock in a weekly time frame, let's say this is the trading view and you have loaded a weekly time frame, the chart is looking like this. What is this? A 45-degree angle. These are your companies for long term which is showing strength, and ideally these are the companies you should keep it under long term, else we keep it under short term, right? Yeah. So Suzlon, a very good case study, a very good example, and even there was a detailed discussion in one of the Platinum Council call we have discussed way back in August, right? So I don't know, every company, if you understand what is happening in the root, the same logic you can apply for many companies, right? Many companies. This fundamentally may not be a very strong company, but when you see the momentum which is coming, don't keep it for long term, but short term play around it. Let it build up. Let it show its strength for 4 weeks, 5 weeks, 6 weeks. Then we can agree, okay, it can fit into long term, right? Now, let's discuss about long term watch list. Sir, I have identified, and I think this is a company which should go for 3 years, 5 years, like that, right? First thing, review at least once a week or fortnight, right? Every week, once you review your long-term companies, or once in 15 days, you keep reviewing. And if you say, sir, 5 years, 10 years, I'm leaving this company, whatever goes, I don't bother about this company. No, I think gone are those days where you invest in a company and you forget for life. Now the business cycles have changed and the iteration is very, very fast. So you have to look at your portfolio once in a while. Short term, as I discussed, maybe twice a week. You need more screen time for that because it's more volatile. Long term, at least once a week or at least once in 15 days. And all your investments you're holding for 1 year and above, or even 3 years and above, you have to keep here. And your time frame should be weekly and monthly. Do not worry about daily noise, right? Sir, I'm holding VBL, Warren Beverages, Trent Limited, Narayana Hrudayalaya. I observed the company consistent growth in the numbers and there is a lot of potential coming up. But yesterday it has fallen by 3%, sir. Last week on Wednesday it has fallen by 2%, sir. Don't get that noise. Not daily, weekly and monthly chart. Long-term companies on weekly and monthly. Short-term we observe on daily. And this is something which you should not touch or you should not do, right? Let's quickly discuss what are the common portfolio management mistakes. First thing, forgetting about sold stocks, right? Sir, yes, I've been into a company. It's because I've entered too early, or it's a strong company, but the general market conditions are not right, so the stock has fallen down. Or after a proper breakout, if it did not sustain, if it is falling, you would have entered there. But whenever it is again retracing back, you should be there, right? You should be there. So yes, the stock which you have analyzed and because of some reason it has fallen down, it gave you an exit. It's fine, you can exit, but don't forget about the stock. You need not completely leave it. Second, not wanting to take a loss, right? Not wanting to take a loss. Related to the first point, let's suppose that there is a very good company, very strong news, earnings has been wonderful. I expect for the next couple of days or for the next couple of months, the stock will do very good because all the groundwork I have done and trend wise very strong. But because of the general market condition, on that day there was a news which is a big negative impact for the entire Indian market. And if your stop loss has triggered, move out, because we don't forget the sold stocks. You need not forget about the sold stocks. Once it retrieves, we can always enter, but always be prepared to have a stop loss. And what did I tell you? This week is about tighter stop loss, right? From your purchase price, 6%, 7 or 8%, whatever you fit, that is applicable to you. Sir, I'm a very, very conservative investor. I don't want it to accumulate more loss. Have a strict stop loss. Sir, I know about the position. I think it will be doing good. Just the general volatility. Keep 8% stop loss from the purchase price. When there is volatility, stop losses should be very strict, and do not be in a situation of not wanting to take a loss, right? And ignoring sell signals. A company is falling with heavy volumes and even it is falling below EMA 21, EMA 50, right? Or even as the volumes are very high, you see a good red bars, right? I'll just give you a pictorial representation, right? If you see a chart which is falling like this and the sellers, which are your red bars, are increasing, which is a reflection that the institutions are exiting, or there are a lot of players who are moving out of it. This is an exit signal for you. But still, if you are not moving out, you are just not following the rules. And these are some of the common portfolio management mistakes. And just to summarize, let me tell you, every investment you take under short term or long term, have your periodic review, and avoid common mistakes, right? Do not forget about the sold stocks. Again, when it gives you a re-entry, you can be there. Follow strict stop loss. During high volatility, our focus is on capital protection rather than the profits. And third, never ignore sell signals, right? The main golden nugget is when we are making good profits, a very good winner in the portfolio, keep averaging up, right? Your golden nugget in stock market, your winners increase your position size, average up. Your losers cut as early as possible, right? Cut out your weeds, cut out your losers as early as possible. Do not increase on your losing positions, right? Out of these things, what are the things which you will be following from now onwards, right? Let me know below.